Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello and welcome to the latest episode of InvesTips. Today we're going to discuss wealth lending, a smart but often overlooked strategy in modern wealth management. This powerful tool lets you unlock liquidity without having to sell your long-term investments. Let's discuss how you can use this strategy to fuel your investment journey. Joining me today is my friend and colleague Nic Rigois, Global Head of Capital Market Products and Solutions at Standard Chartered. With more than 25 years of experience, he brings deep expertise in wealth management, structured products, and cross-market solutions. Nic, a warm welcome to you.
Thanks for the warm welcome, Steve. I'm very glad to join you on this podcast, a podcast I've been listening to. As you pointed out, wealth lending can offer tremendous flexibility and strategic value and serve as a silent engine enhancing your wealth strategies.
Okay, so I guess the best financial tools are the ones that continue to work quietly in the background, even when you're asleep. So wealth lending certainly fits that adage and is a potential game changer. But before we get into how it can actually be a game changer on your wealth journey, could you just give us a quick rundown of what wealth lending actually is and how it works?
Sure, Steve. So wealth lending is a form of secured lending. The idea is that clients can pledge the various securities and assets held in their portfolios, all the way from bond to funds, alternative investments, structured product, as collateral that they can borrow fund against. This brings a lot of flexibility because that means you can acquire other assets or disburse funds without having to sell the assets that you have in your portfolio.
Okay, so can you give us just a quick overview of how it actually works?
Sure. So the credit limit under this arrangement is determined by a range of factors, including the type of asset offered as collateral and the asset held in the portfolio. There are several features that lend flexibility and convenience to the arrangement. For instance, it allows for multi-currency borrowing. It supports flexible repayment on interest accrued, but on the utilized part of the credit facility only. Because it's secured lending, it offers attractive pricing. Mm-hmm. And of course, for our internationally mobile client, there is global coverage through our wealth hubs.
Okay, so that's a good starting point, right? So I guess what really stands out to me is the personalized credit terms and attractive rates that you can get. And also the flexibility. And so it becomes more, I guess, investor-centric in some shape or form. Could you walk us through the basic qualification criteria and how things like margin calls are managed?
Sure. So needless to say, wealth lending is primarily designed for the affluent community. So there's a basic qualifier, which is a minimum portfolio size and a portfolio that also can be pledged as collateral. As for margin call, a very important topic, typically they are triggered when the value of collateral falls below a certain threshold. This can be resolved either by topping up the collateral or by partially repaying the loan, which can also be achieved by selling out some of the existing assets. Managing margin call proactively is key to keeping the strategy smooth and effective.
Okay, so that sounds pretty straightforward. I guess we'll dig into the risks in a bit, but I guess the starting point is to be deliberate in the leverage employed, dependent on the portfolio that you're leveraging. So I guess, what's interesting is that while wealth lending has tremendous potential to elevate your wealth outcomes, only a fraction of investors actually use this strategy. Can you share why you think people should consider wealth lending as a part of their investment approach?
Sure. So that's a very important aspect to cover. Let me give you a few key reasons. So firstly, wealth lending gives you quick access to cash without having to sell your holding. Steve, I listen to you and you often emphasize the importance of staying invested. Mm-hmm. Now, for those who like to buy and hold, this means you can keep your market exposure. Now, unlike traditional credit facilities, wealth lending can be pre-approved and accessed right when you need cash. Speed is crucial for our clients, especially when they try to access the tactical opportunities that you bring on the table, Steve. For seasoned investors, wealth lending is more than just a way to access liquidity. It's also a tool to leverage and generate outsized return. Some of our clients use these borrowed funds to invest in higher yielding opportunities or to diversify across asset class. This allows them to optimize their portfolio and their return without eroding their capital. And we see it as increasingly popular both in Asia and the Middle East. Last but not least, like everything else these days, AI could become a game changer and disrupt the industry. It's likely to bring more personalization in the topics of how credit lines are attributed, so in underwriting, how the portfolio, the collateral is being monitored, but also in risk management and trying to anticipate the risk to better manage the margin calls and top-ups.
Okay, so you've given us very compelling reasons for everybody to consider wealth lending. As it evolves from a reactive tool to a core strategy, I guess it's only right that we explore how our listeners can truly leverage it within their portfolio, excuse the pun. In your view, what are the most impactful ways that wealth lending is being used today?
Great question. So wealth lending is rapidly becoming a must-have for long-term success in a client journey. Some of our clients simply use it to amplify the return in their investment portfolio. They can, by borrowing, you can generate outsized return, provided you get the market right, of course. So if you take an example, right, if you invest 100,000 in a mutual fund, and let's assume that mutual fund normally returns 6% per annum, right? If you use the collateral value granted by this mutual fund to borrow an additional 70,000, let's say at 2.5%, right? You're now invested for up to 170,000 in that same mutual fund. And for 70,000 of that, you're paying 2.5% to borrow the funds. Now, net of everything, that means that you may still return around 8,500, assuming that mutual fund continues to return 6%, right? Which is 2,500 more than you would have if you had just invested your 100,000. Now, of course, outsized return comes from outsized risk, and it's important to be aware. But if well used, that element of leverage clearly can boost the returns, right? Another common use case is what's referred to as premium financing. So a way to finance for insurance premium. Here, the borrower can directly borrow against an insurance policy, right, to fund its premium. This has multiple use, but in jurisdiction where insurance products come with tax advantage, in particularly around the topic of wealth planning, it is an essential tool to plan your legacy. Last but not least, or the last example I'll provide is that wealth lending can also come with the concept of cross-currency borrowing. So you could have an investment portfolio based in US dollar, and you could pledge it and borrow in Japanese yen, right? Now, to access Japanese yen assets, to access structured products that are quanto in yen, maybe even to help you buy a property in Japan. Now, of course, cross-currency borrowing comes with an additional risk factor, which is the foreign exchange risk. And that comes on top of the traditional factors that are interest rate risk and market volatility. So it's something to take note of, but this cross-currency lending strategy, when managed prudently, can enhance portfolio diversification, improve capital efficiency, and support long-term growth in your portfolio.
Okay, you dipped into some of the risks there, right? So let's talk about that a little bit more. I guess I'm an economist. We're taught one of the key things is there's no such thing as a free lunch, and leverage is a double-edged sword, right? If employed without due care. So can you just give us a sense of some of the key risks associated with wealth lending?
So understanding risk is crucial in wealth lending, and calibrating it to your appetite and your circumstances is key to success, right? A few of the risks involve are collateral risk, which is a prominent one. It occurs during a market dip where the value of the assets that the client pledged, so the collateral value itself, can come off. And that in turn can trigger margin call because there is less collateral to support the borrowing. And that may lead to essentially forcing clients to liquidate their assets at the least desirable moment. And to mitigate that risk, obviously, it's important to not overextend oneself so that you're not forced into that position. A second risk is the rising of interest rates. It's obvious when you borrow in floating rate, when rates go up, the cost of borrowing goes up. So that's something that needs to be monitored. And obviously, there are times in the interest rate cycle that are more conducive than others to leveraging our portfolio. A third risk, which we touched on earlier on, is currency mismatch. So when there's a mismatch between the assets held in collateral and the currency of borrowing, you're sitting on foreign exchange risk. Something that can enhance your return, but comes with an additional risk factor. Now, leverage amplifies returns in both directions. That's why people do it. You can make more when the market goes your way. You will lose more when the market goes against you. And so it's important, again, to calibrate it carefully to make sure that you can afford the amount of leverage that you're putting on and that you monitor the risk very proactively.
Yeah, and it doesn't get in the way, I guess, as you said earlier, of staying invested for the long term. So, Nic, I couldn't agree more with your comments. Right? I mean, wealth lending is a very powerful tool, but it does need to be used very carefully. So we just need to make sure that's ingrained in the way that people employ it. So, well, I guess with that, Nic, thank you so much for your time. We've come to the end of today's episode. We would like to thank our listeners for tuning in today. If you'd like to know more about wealth lending, please visit the link in the podcast description. We also have a report which you can get from your relationship manager, which goes into this in more detail. In the meantime, thanks, Nic, again, and I hope we get to catch up again soon. Until then, take care.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.